For Waller, first of all, he's been in this camp for ages. There's that great kind of map of like where the Fed governors are on the spectrum. And you've got like Waller out in some like distant part of the universe, which is like very different from everywhere else. So he's always an extreme dove, and I think that needs to be in that context. Now, what is his argument? So first of all, it is true the labour market is stalling. Do I think it's red alarm bells, whatever his phrase was? It wasn't exactly that, but don't worry. No, I don't. I think in terms of that, because immigration is being restricted in the US, I don't think there's the kind of slackness or the in the labour market. So even though the market is stalling, it's still quite a tight labour market, and I still think there's a risk of inflation there. And also, he's very much firmly in the camp that tariffs will not be long-term inflation. It'll be a one-off move. Now, whether you agree with that or not, and I'm not convinced by that camp, but I think we'll have to wait to see. I think it's bonkers to reach that conclusion, A, this early, and B, particularly in a process where it's such a drawn-out kind of idea. So, like, a cut this month is absolutely... It's never going to happen. And I don't know, it's clearly posturing. It's ahead of the Fed blackout window starts tonight, which I actually had forgotten about. It's going to be great. He's interviewing on Bloomberg TV today.
Exactly.
We're going to get the fun. But again, it needs to be like everyone knows the dove. It's not like this suddenly shifted the market. Normally you get this last minute communication from Fed governors. Actually, this is probably what's most interesting. Normally, the last 48 hours before the Fed blackout window, you kind of assume it's a bit of a directed programming of communication, like that Powell sent out all his troops to kind of let's get the pricing right. And clearly, that's not what's happening here. And actually, it's not only that it's not happening, it's that you can show the divide in the FOMC committee, that someone is so willingly going to put out his view that's so anti the pricing, so anti what the rest of the committee thinks. That actually, I think, is the biggest message here, is that this is an FOMC committee which is divided, which is broken, and that makes it really, really interesting going forward.
Do you think he's going to be joined in dissents, possibly, at this July meeting by anyone?
Valerie, if I was going to try and answer that question, I'd probably go to someone called Valerie Tytel to find out. So, you know what? You know more than me. I don't think so.
I mean, it could possibly weaken Powell's decision. He hasn't had a dissent in nearly a year now.
Yeah, look, I am not on top of this. As far as I understand, I don't think anyone else is expecting to dissent, and I just think it'd be crazy. Look, from a policy point of view, if I was on the committee right now, there is no way I'd be pushing for a cut right now. We just do not have enough information on tariffs. We don't have enough information on the labour market, and therefore I think it's absolutely right to wait more time. And a really important from the Fed point of view, the policy should be to wait to cut as late as possible and then cut really aggressively. That's what you do. You don't cut prematurely when you've got the risk of stirring up inflation.
Well, he did call this an insurance cut, and he said that the market should be okay with that. The Fed should be okay with doing something like an insurance cut.
Insurance cuts are a bad idea.
Well, hang on. Sorry, I just want to talk about something other than the Fed, which is, come on, stop.
Back to the golf and football.
No, I don't want to talk about the golf, and I didn't watch the football because it was on too late. Anyway,
I'm not even English.
Yes, and I really love women's sports. But what about stocks? Why are we seeing this just incredible run up in stocks in the US?
So, I mean, obviously, still earnings are still good. We've not seen a big slowdown in the economy. We don't know what's happening in trade new tariffs yet. They're still being kind of delayed through. We've got a massive fiscal bill. There's lots of good reasons. A softer dollar is an easing of financial conditions. Data has been good. What's happening in stocks makes sense. And it's important to remember that US stocks are still underperforming. Whether it's a 2-month window, 6-month window, 1-year window, they have underperformed the rest of the world. Now, most of that is due to the currency impact. It is true.
Yes.
But the point is there's still an underperformance there. So, I think there's this real problematic idea in the markets that people associate the end of US exceptionalism with a sell America trade, which is just idiotic, because a sell America trade can only ever be tactical. You're talking about one of the world's largest economies, really, really amazingly strong companies that are cash-generating machines. So you can have a sell America view, but it can only ever be held short-term when it comes to stocks. Whereas I think the end of US exceptionalism is a multi-year theme.
Well, look, to that point, we did have tick data, which is the kind of flow of funds data for May. It's very delayed, but it didn't necessarily show any glimpse that investors were selling U.S. assets. If anything, it claimed the exact opposite. Investors were coming in to U.S. assets. Does that change your view at all on this end of U.S. exceptionalism trade?
No, not really. I said, I think the most important part of it is the dollar component, but I think there's several other components. This is not about a bearish view on the U.S. This is about the rest of the world outperform. There's two main components of it. I think one is that I think that the benefits of the AI productivity boom will not so disproportionately go to U.S. companies as is priced. The U.S. companies will be big beneficiaries, but it's not just them. Many of it will go to the software and in the open source nature of DeepSeek has kind of shown that, not just the cheap nature. So I think that the small caps will do well, EM will do well, value will do well. So that's one aspect against US that's priced at all the gains. And I think also the dollar component is quite important. Again, I'm quite constructive on the US long-term view. I don't think it's a terrible idea. I just think it's not going to be outperformed like it has the last 14 years.